Every generation believes it's smarter than the last, more advanced, more informed, more financially aware. And yet, we keep falling for the same exact financial mistakes over and over and over again. Why? Why does humanity, with access to more information than at any point in history, still fall for illusions that destroy economies? Why do rational people buy into irrational visions of wealth, even when the warning signs are right in front of us today? We're going to expose the psychological traps and economic illusions quietly shaping our decisions, often without us ever noticing. And by the end of this video, you'll understand why the next financial disaster is already being built, in plain sight. A history of illusions. Economic illusions are not new. They're as old as money itself. In the 1600s, the Dutch lost fortunes on tulip bulbs, believing rare flowers had become assets. In the 1700s, France collapsed under the Mississippi bubble, chasing a fantasy of wealth in the New World. In 1929, the stock market collapsed because everyone was convinced the modern economy had defeated downturns forever. Different eras, different currencies, different technologies, but the same emotional blueprint. This isn't a story about wealth. It's a story about human psychology and how our minds betray us. Where economic illusions come from before we talk crashes. We need to talk cognitive biases, the hidden bugs in human thinking, because every economic illusion begins with a flaw in perception. Let's break down the 3 psychological engines that power most financial disasters. 1. Confirmation bias. We seek information that proves we're right, and ignore anything that proves we're wrong. This is why, when markets rise, everyone only notices news saying it will keep going up. When real estate booms, nobody listens to warnings about overpriced homes. When cryptocurrencies skyrocket, skeptics are dismissed as not understanding the future. The illusion starts here. 2. FOMO, fear of missing out. This is how bubbles inflate. Friend, I bought and doubled my money. If I don't buy now, I'll miss the opportunity. And suddenly, an idea becomes a frenzy becomes a belief, and a belief becomes a market. 3. The authority effect. When someone influential says it's safe, we stop questioning the danger. Economist, billionaire, government, celebrity, investor, their confidence becomes our evidence, even when they're just as blind as we are. When these 3 forces combine, confirmation, FOMO, and authority, an illusion forms. It feels real, it feels logical, it feels inevitable, and that is when the trap closes. How illusions build momentum. Let's walk through the life cycle of an illusion step by step. Stage 1. The spark. A new technology, a new market, a new asset class. No history, no precedent, no proof it won't work. This is where dreams are born. Stage 2. The story. Every financial illusion needs a story. .com bubble story. The internet will change everything, so profit doesn't matter. Housing bubble story. Real estate never goes down. Crypto mania story. Decentralization will replace all global finance. The story doesn't need to be true, it just needs to feel true. Stage 3. The validation. The market goes up. Early adopters profit. The media amplifies it. Now the illusion is self-reinforcing. Rising prices become proof the story was right, even when they're just the result of people piling in. Stage 4. The point of no return. The illusion becomes a belief system. Anyone who questions it is an enemy, a pessimist. Someone who doesn't get it. FOMO accelerates. Rationality evaporates. People stop buying assets. They buy hope. Why the illusion always fails. Every illusion hits a mathematical wall, because eventually, the price of the asset rises faster than the value it can ever realistically produce. Tulips cannot justify mansion-level wealth. Not every .com business can be profitable. Housing prices cannot double every 3 years forever. Crypto cannot all be the future of currency. These illusions collapse when reality re-enters the chat. The sequence of collapse. 1. One influential investor pulls out. 2. Prices stall, not fall, just stall. 3. The stall triggers fear. 4. Fear triggers selling. 5. Selling triggers panic. 6. The bubble pops. And just like that, the illusion breaks. But the damage lingers for decades. The cost of believing the illusion. When illusions collapse, the numbers are brutal. Families lose homes, retirements evaporate, businesses shut down, countries enter recessions, trust in institutions fractures, and the most tragic part, the people most hurt are rarely the ones who caused it. It's not hedge funds, it's not politicians, it's not banks, it's ordinary people. People who trusted the illusion. Every time a bubble pops, governments promise regulation, banks promise caution, investors promise discipline, until the next illusion appears. Why? Because illusions evolve. The next bubble never looks like the last bubble, so we don't recognize it. And even when we do, psychology still wins. We see others getting rich. We feel the fear of missing out. We ignore the warnings we once swore we'd remember. Today, new illusions are forming. Not in tulips, not in suburban houses, not in .com stock, but in places like AI startup valuations, digital assets, and altcoin zero-day IPOs with no profit model. Green rush startups with unproven tech, meme-driven retail trading, unrealistic expectations around automation and UBI economics. Every single factor is repeating. Confirmation bias, FOMO, authority influence, a beautiful narrative, rising charts acting as proof. It's the same movie, we've just changed the actors. Most adults cannot explain inflation beyond prices go up. The majority of retail investors buy at market peaks, not lows. Consumer debt is rising faster than wage growth in multiple countries. Overconfidence and financial literacy does not predict actual knowledge. We feel confident, but we are not prepared. Most people think financial crashes happen because of greed, or capitalism, or corrupt elites. But the real reason is simpler, more tragic, more human. We fall for illusions because reality is painful, and illusions feel good. It's easier to believe a story of endless growth than to accept that growth has limits. It's easier to believe wealth can be automated than to confront the discipline required to build it. It's easier to trust the crowd than to stand alone against it. Economic illusions don't deceive us. We deceive ourselves. 3 core takeaways. Takeaway number 1: if an investment requires a story to justify it, it's probably not an investment. It's an illusion. Takeaway number 2: the moment something becomes too big to fail, it is at its most fragile. Takeaway number 3: if everyone agrees it's a guaranteed win, that's the moment you should step back. There will be another financial illusion. There will be another bubble. There will be another crash. The question is not if, it's whether you will be inside it or outside watching it happen. So the next time a friend says, "Trust me, this is the future," ask yourself one thing: is this the future, or just another illusion repeating history? If you learned something today, hit subscribe. Share this video with someone who might need the warning, and leave a comment with the biggest financial illusion you once believed. Because the only way out is awareness. This is Economic Historian reminding you that wealth isn't built on trends, it's built on truth. See you in the next video.